Hi, believers. This is Nishant from Waya. We have seen an impressive rally in the markets throughout September, with most sector participating, indicating broad-based momentum. Sectors like auto, banks, FMCG, and metals have surged between 5 to 7% in the month of September, while pharma and IT, which held the market in the month of August, still managed a 1% gain. This quick sector rotation shows strong market dynamics. Let's discuss charts of major indices and sectors to see if we are nearing the top and also to discuss the sectors which are favorable for the month to come. Starting with the Nifty, in the last month's update, we projected Nifty could reach 26,300 if it holds support levels. The Nifty has hit a high of 26,277. Looking ahead, we see 26,300 to 26,500 as a resistance zone for two key reasons. First, the Fibonacci cycle ends at 26,300, and the second is the upper boundary of the price channel represents resistance. Additionally, the Nifty's monthly RSI has exceeded 80, which historically signals a potential correction. However, this doesn't necessarily imply a major drop, as RSI could also cool off during a consolidation phase. This price action also coincides with the upcoming US presidential elections in early November, which will lead to profit booking and decrease in leverage trades in the month of October. So, while some consolidation is likely, a buy on dip strategy remains valid with Nifty potentially heading towards 27,500. Now, moving to Bank Nifty, in the last monthly update, we highlighted banks as a preferred sector because of the risk reward it offered. On a longer time frame, the index is hitting the resistance line from an upward sloping trend line. While this might suggest a cap on the rally, we believe a buy on dip approach is still viable. Bank Nifty recently closed above its previous Fibonacci resistance, opening the door for new targets. However, we have to still wait for one more session to close above this resistance. We are eyeing 57,000 as a next level, a 6% upside from here, with 55,000 acting as a psychological resistance. Support lies at 52,500, below which we would need to reassess our thesis. With banks, keep an eye on NBFCs like Bajaj Finance and Bajaj FinServ in NBFC space. Moving to PSU banks, after private banks rallied, PSU banks are showing early signs of an uptrend, with the index bouncing 5% from a short term reversal level. If you notice on the chart, the index has tested the lows of the election day results and a 200 days moving average. To add to our thesis, we also have a positive MACD divergence and valuation comfort in quality PSU banks, offering a strong risk reward setup. Watch out for Canara Bank and Bank of Baroda. Moving to metal index, after 4 months of consolidation, the index jumped 7% in the last 1 week, driven by China's interest rate cut. The chart suggests this turn in the metal stock is for real. Based on Fibonacci study, if the index gives close about 10,000 in the month of September, we can see a further rally in the metal index. But given the recent run up, a buy on dip strategy is recommended. We like stocks like Tata Steel, Hind Copper, NMDC, National Aluminium, and Hindalco. Moving to pharma index, the sector continues to look strong, with the index up 40% in the year 2024 so far. Although 24,000 levels represents a Fibonacci resistance, we expect this to surpass because on the daily time frame the index has maintained its momentum. However, we are constantly looking at the level of 22,600 as a support level. We are expecting a target of around 25,500 on the pharma index, which is 6% up from here. Concluding our analysis, the major indices are at all time highs with no significant sign of weakness, but we are close to resistance. We are entering result season. The markets will be more stock specific. Additionally, the US presidential elections results due in the early November. Investors will be watching for the outcome. Our sector preference remains pharma, metals, select private and PSU banks and NBFCs for because of the valuation comfort. Indian market continues to remain buy on dips because of the structural story and the growth it offers. At Vaya, we make our best efforts to keep you informed about markets through our weekly bite and sectoral update. Thank you and good night.